Good morning. It is 6:54 here at Money Radio and the Business for Breakfast show. Ken Morgan, Mark Asher with you. And joining us now, tax expert, CPA, CEO, and author Tom Wheelwright. Tom, have you missed us?
I have, terribly. It's good to be back on the show, guys.
All right. Since you're a CPA, you probably could read both the Senate and House bill without wanting to stab yourself.
Or at least not doing it.
I have and I haven't. So
Right.
Good.
All right. So what are the major differences, as you see them at this point, between those two versions?
There's actually some significant differences. They're going to have to be reconciled. They've got how pass-through entities like partnerships and S corporations are taxed is very different between the two. A lot of the deductions, like the medical expense, the home mortgage deduction, those are both different in the Senate bill than they are in the House bill. So we're going to see some pretty big differences by the time this thing's passed.
I'm glad you talked about the the real estate and the write-offs there. I know some people who, looking at properties, $1 million properties, things of that nature that are like, whoa, this could be a complete game changer, right?
Well, yeah, for sure. I mean, if you're looking at a house, if the House bill only allows you up to $500,000 mortgage interest, right? So if that passes, I think that's the one that'll pass. I think they need the money. So I think you are looking at that limit of $500,000. And that means that anything over that, you're going to have you can't have a tax reason for living in the house. You've got to have a really good reason.
All right, let's assume that something gets passed before the end of this year, Tom. Are there going to be any measures that are retroactive in there that we're going to have to look back on? I mean, they will try if they can, as you said, if they get some money some way. Is that a possibility, and should we be worried about that?
Well, actually, there are. They're already in there, okay? So the House bill, a lot of it's retroactive to November 2nd, and the Senate bill, though, has some good things that are retroactive to September 17th. So if the Senate bill version passes, then businesses will be able to expense all of their equipment they bought since September 17th. So there's some positives that go retroactive. The negatives, I don't think there's a lot of negatives that go retroactive, so I wouldn't worry too much about that.
All right. And I saw this morning, too, President Trump has said that he would like to have a 20% corporate tax rate, but if it has to be a little higher than that, he can live with that.
Yeah, he has said that, and you may see a 21 or 22% because that would help pay for the bill because, definitely this is running at a deficit right now, and the Senate especially has an issue with that. The House doesn't seem to be bothered too much by that. There is actually a really nice thing in this bill that would help Arizona.
Which is?
Well, we have these school tax credits that we can donate to schools.
Right.
Under both bills, we lose the income tax deduction. So now that credit that we pay, we'll get a charitable contribution, okay? But otherwise we would lose a state income tax deduction. But now we get a charitable contribution on the federal and a state tax credit. So you actually will make money by donating to the tuition organizations and after school activities.
Oh, that's pretty good. I thought you were going to say free air conditioning for everyone. That would have been a little cooler. All right, leave me with this. In kind of layman's terms, if you can, Tom, what, winners and losers, like we all kind of bracket ourselves, low income, middle class, upper class, who's the biggest winner of those three, and then who do you think will be the biggest loser?
I actually think the middle income with no kids, they're the biggest winners because they get bigger standard deduction. If you have kids that are under 18, then you get a tax. The tax credit's gone up from $1,000 to $2,000, so they're winners. The East Coast and the West Coast are both losers because they lose the state income tax deduction and they have really high state income taxes. We have low state income taxes, so it actually benefits Arizona as a population, and certainly anybody with a business.
All right, Tom.
Hugely benefit.
Our exit music is playing. Tom Wheelwright joining us. Your company is still called Provision, right?
It is, and we're at taxfreewealthadvisor.com. Taxfreewealthadvisor.com.
Tom Wheelwright.
Check it out. Thanks, Tom. Appreciate the info.
Hey, thank you. Anytime.